Today, we're going to be exploring investing, specifically for teens, based on the Moneyverse podcast episode that you shared with us. Now, whether you're like a seasoned investor or just starting out, this deep dive is all about making investing approachable and maybe even a little bit exciting.
That's right. Yeah, we're going to break down some of the key concepts and advice from Moneyverse and hopefully give you some actionable takeaways no matter what stage of life you're in.
Okay, awesome. Let's jump right in. One of the first things Moneyverse highlights is this idea of compound interest being like magic. It's like your money actually making more money over time. And it's like a superpower that teenagers can unlock early on.
It's a really powerful concept, and the episode does such a good job of explaining it simply. Imagine like a snowball rolling down a hill. It starts small, but as it rolls, it gathers more snow, growing bigger and bigger. That's kind of how compound interest works. Your initial investment grows, and then those gains start generating their own WN gains, creating this snowball effect over time.
That's a great visual. I like that. And Moneyverse really emphasizes that starting young isn't just about the numbers. It's about building those good financial habits early on. They interviewed Jason Miller, who started investing as a teenager himself, and he talks about how those early experiences shaped his whole approach to money.
Yeah, Jason's story is really inspiring. What's so fascinating is the psychological aspect. He highlights how starting young, even with small decisions, builds confidence and a healthy relationship with money.
I can see how that would make a big difference later in life, but let's be honest, a lot of people, especially teenagers, might be thinking, I can barely afford a movie ticket. How am I supposed to invest? Moneyverse tackles this head on.
Right, absolutely. They acknowledge that not everyone has a lot of money to start with, and that's okay. They point out that even small amounts can make a difference over time, especially with apps like Actionable mentioned in the source. That let you invest with just a few dollars. It's about building that habit no matter how small the initial investment.
So Moneyverse actually breaks down their advice by age, which I found really interesting. They start with 13-year-olds, and the emphasis is on learning. What kind of learning are they talking about?
Well, Jason Miller specifically suggests reading books like Rich Dad, Poor Dad, which challenges traditional views on money and wealth, and The Simple Path to Wealth, which offers a clear guide to index fund investing. The idea is to start building a foundation of financial knowledge, even before you actually start investing money.
So it's not just about jumping into the stock market blindly. It's about equipping yourself with the right knowledge first. I like that approach.
Yeah.
What about 16-year-olds? What's the advice for that age group?
At 16, Moneyverse suggests it's time to start taking action. They encourage teens to think about ways to earn money, perhaps through freelancing, graphic design, or coding, skills that can be developed alongside schoolwork. And they highlight Roth IRAs and index funds as good starting points for investing.
Now, those terms might sound a little intimidating to someone who's new to investing. Can you break down what those are and why they're beneficial, especially for young people?
Sure. A Roth IRA is a special type of retirement account that lets your money grow tax-free. What's great for young people is that you contribute after-tax dollars, but when you withdraw in retirement, you don't pay any taxes on those earnings. It's a really powerful tool for long-term growth. Index funds are like baskets of stocks that track a particular market index, like the S&P 500. They offer diversification, meaning you're spreading your risk across multiple companies, which is a key principle of smart investing.
So even if you're not an expert stock picker, you can still build a diversified portfolio with index funds. That's a good takeaway, especially for someone who's just starting out. Now, Moneyverse also emphasizes this idea of diversification, even within index funds.
Right.
They don't want you putting all your eggs in one basket, even if it's a basket of stocks.
Exactly. Moneyverse is really big on risk management. They don't advocate for risky bets or chasing the next hot stock. They're all about building a solid foundation for long-term sustainable growth. It's about playing the long game, not trying to get rich quick.
And that makes sense, especially when you have time on your side. Speaking of time, let's talk about Jason Miller's personal journey. He started investing at 15, saving half his earnings, and putting his money into mutual funds and stocks. He openly admits he made mistakes along the way, particularly with diversification. But he sees those mistakes as valuable learning experiences.
That's such an important point. Investing is a journey, and there will be ups and downs. It's not about being perfect, it's about learning from your experiences and making adjustments along the way. Jason's story shows that even seasoned investors make mistakes, but it's how you handle those mistakes that really matters.
It's refreshing to hear someone like Jason be so candid about his mistakes. It makes the whole idea of investing feel less intimidating. So we've talked about learning, earning, and taking those first steps with investing. What about 18-year-olds who are about to enter adulthood?
That's such
What kind
an
of
important
advice
point.
does
Investing is
Moneyverse
a
offer
journey,
them?
and there will be ups and downs. It's not about being perfect, it's about learning from your experiences and making adjustments along the way. Jason's story shows that even seasoned investors make mistakes. But it's how you handle those mistakes that really matters. Suggest expanding the investment portfolio beyond just index funds, exploring things like ETFs.
ETFs,
and
that's
even
another
real estate
term
if
that
it's
might need a
feasible.
little explanation. What are those exactly, and how do they differ from index funds?
Good point. An ETF or exchange-traded fund is similar to an index fund in that it holds a basket of assets. But ETFs are traded on stock exchanges like individual stocks. This can make them a bit more flexible and potentially have lower fees than some index funds. They're a good option to consider
Okay, so
as
we've
you
got
diversify
Roth
your portfolio.
IRAs, index funds, ETF. It sounds like there's a whole world of investment options out there. But Moneyverse doesn't just throw all these terms at you and leave you to figure it out.
Right.
They actually offer some practical advice and answer some common questions that their teen listeners might have.
Yes, they do. One of the questions they address is how to choose a good investment app, especially for beginners. They actually recommend the app name mentioned in the source, highlighting its user-friendliness and low fees.
I
which are
imagine
important
that's a big
factors
hurdle
when
for
you're
a lot
starting
of
out.
people. Knowing where to even begin, which app to trust. It's helpful that they actually name a specific app that they vetted. What other questions do they tackle?
Another question they address is how to get your parents on board with the idea of investing, which can be tricky, especially
Oh,
if
I
your
bet that's a
parents aren't
common challenge for
investors
teenagers.
themselves.
What kind of advice does Moneyverse give
Mhm.
on that front?
Jason Miller suggests approaching the conversation with a plan and showing initiative. He emphasizes the importance of doing your research, learning about investing, and then having a conversation with your parents from a place of knowledge. Knowledge is power, and it can help
That
you
makes
make
a
a
lot
more
of sense.
persuasive case.
It's much easier to get someone on board with an idea when you can clearly explain why it's a good idea and how it works. It shows you're serious and that you've put some thought into it. So we've covered a lot of ground here. We've talked about the magic of compound interest, the importance of learning the basics, building good financial habits, exploring different investment options, and even navigating those tricky conversations with parents.
And we've heard from Jason Miller, who started investing as a teenager and has clearly learned a lot along the way. His story shows that you don't need to be a financial expert
What I
or have a
appreciate
ton
about
of money to get
Moneyverse
started.
is that it's not just about the mechanics of investing. It's about empowering people, especially young people, to take control of their financial futures.
And that's a message that resonates with people of all ages. Whether you're 16 or 60, it's never too late to start learning about investing.
Before we
And
wrap up,
making
I
your
want to
money
touch on
work
the
for
end of
you.
the Moneyverse episode. They have a typical call to action, encouraging listeners to subscribe to their podcast. It's a great podcast, and we'll definitely link to it in our show notes. But I'm curious to get your take on a final thought. For our listeners, building on everything we've discussed today, what's that one key takeaway you hope people walk away with?
That's a great question. You know, it's so easy to get overwhelmed by the whole world of investing, with all the jargon and the complexities. But what Moneyverse does so well is break it down into manageable steps. So my final thought for our listeners is this: don't let fear or intimidation hold you back. Start small. Take that first step, whether it's reading a book, downloading an app, or even just having a conversation about your financial goals. It's about
I
building
love that
momentum one
advice.
step at a time.
Don't let fear hold you back. It's so easy to get paralyzed by the thought of making a wrong move. But like Jason Miller showed us, even mistakes can be valuable learning experiences.
Exactly. And the beauty of investing is that time is on your side. Especially when you start young, even small, consistent actions can compound into significant results.
So to wrap things
over
up,
time.
I think it's safe to say that this deep dive into the Moneyverse podcast has been incredibly insightful. We've learned that investing isn't just for financial gurus or people with tons of money. It's a journey that anyone can embark on, regardless of age or experience.
Absolutely. Moneyverse does a fantastic job of demystifying investing and making it accessible to everyone, especially teenagers. They provide a clear roadmap starting with education, then moving into earning and taking action, all while emphasizing the importance
And they
of
don't just
building
talk about the
good financial
concepts.
habits.
They offer practical advice, like recommending specific books,
Yeah.
apps, and even strategies for navigating those, sometimes tough, conversations with parents.
Right. They give you actionable steps you can take today, no matter where you are on
So
your
if you're
financial
feeling inspired
journey.
to take that first step, remember some of the key takeaways from Moneyverse. We've got resources like the books Rich Dad, Poor Dad, and The Simple Path to Wealth. Beginner-friendly apps, like the one they mentioned, app name mentioned in the source, and the reminder that even small contributions can make a big difference over time.
The most important thing is to start. Your future
Couldn't have
self
said it
will
better
thank
myself.
you for it.
That's all the time we have for today's deep dive into teen investing. Thanks for joining us. And remember, the journey to financial freedom starts with a single step.